Hello folks, so today we're looking at this is actually our first market commentary on this series. This is just going to be a long series from this year into next year. We're going to be doing commentary every day on price action. We can learn a few things, and we get to teach ourselves and learn, and nobody actually tends to be the holy grail, but I believe that everything takes time with constant effort and practice, and we should get there. It's going to take a lot of work, but throughout next year I'll be posting commentaries every day until, if not every day, or every week, or if I am planning a trade on taking, I take the trade, I'm going to be posting the commentary. So probably for every trade that I take, I would be posting the commentary. I think that's about fair. And I will be posting weekly commentary also, talking about price action. And so it's going to be on two aspects where I have a trade plan. I get to post the screenshots, or I get to post a pre-market and then post the post-market, and we get to see what actually transpires in price at the end of the day. But starting from today up until next year ending, we will be seeing more of market commentaries in NASDAQ specifically, and going further. And regardless of what price action might be, we will be talking about it together. And in this commentary, we will be diving into different PDRs and anything we can get our hands on and talking about price action. So we're going to be talking today first on today's price action, and just today's price action because this is the trade I actually took. This is the trade I had lined out for today. Buyside liquidity 21659.28 booked. This was the trade. Now these are my commentaries are going to be coming on two aspects: the reason for the trade and what I was looking for and what I had planned in mind and prepared to give us a better view on what we were expecting. So I have my charts cleaned, nice, all empty, and let's dive right into it. We're going to be starting today, being Wednesday. We're not far deep into the week yet, so we're going to be starting from Monday price action, and this is Sunday, this is Monday, so we're going to be starting from Monday price action, and we're going to be talking about all this move down, why this move happened, and what happened, what transpired. All right, so number 10, we're going to be going on the daily time frame, and sometimes for the sake of markets, like to give us a clear understanding, we might sometimes be using a market replay. So let's see if we can turn on the market replay. If we can't, we proceed further. So we're going to be playing the market replay and be talking about as price goes on. So this is Thursday price, and then we have a Friday run high. So we had this run higher. We had Friday's low dropping into this BC, but on a lower time frame, we are actually going to be fine-tuning this range right here. Friday on Monday, we actually traded downwards. So on Monday we had our push to the upside, and this is what we are going to be talking about. So we're going to be dissecting a little bit of Monday. We're going to be talking about Monday, Tuesday, and Wednesday. So on Monday we had the 5-minute charts. So we had Monday's high, and like I said, remember we were looking at Friday's low, what was residing, and on Friday my thought process was looking at the 5-minute because I get to see the lows being fine-tuned properly on the 5-minute charts. Let's go back to a 15-minute chart to make it much more clearer. So the day, this is Wednesday into Thursday into Friday. So this range, we had relatively equal lows sitting right about here. So we had relatively equal lows sitting right about here. All the sets are liquidities. That was my thought process, that we had a low, we had an accumulation, manipulation, distribution, we had a market structure shift, we had a shift, we had a retracement, and we had a strong push to the upside. That was all part of a game plan. And then dropping down to going up to a daily time frame, we see that price actually gave a build. So we have Thursday, Friday, so we had this buy side liquidity, sell side liquidity resting below Friday's low. So dealing on this trading. So we had Monday trading, and we have this buy side inefficiency, and that was my thought process for the day. Now, having a daily buy side inefficiency, I like to be precise on where it's likely going to draw to. So daily CB was being marked out, marking out the daily CB, and we had relatively equal lows, sell side liquidities. So we had sell side liquidity to our sell side liquidity before this whole price action, before Monday and Tuesday trading happened. This Monday, Tuesday, before this whole price action happened, we had relatively equal lows. It might not seem as though, because Friday is lower, Friday low is lower than Thursday's low, but on a lower time frame, it's more fine-tuned. So dropping down to a forward chart, let's go down to a forward chart. Looking at Friday's low, looking at this low, dropping down to a 1-hour chart. 1-hour chart. Now, whenever I have a buy side inefficiency or sell side inefficiency, buy side imbalance, the first thing I like to do is I like to mark out the upper quadrant and the lower quadrant. So the upper quadrant and the lower quadrant, I am confident that price is going to come into the lower quadrant, but I need to be sure. Then relatively equal low sell stops, and I have these 2 down close candles being a breaker block, and my attention was on this level. So before this whole drop happened, my anticipation was seeing it come lower if I get a market structure shift, or if I get a reason to go short within the new week. So I had this all lined out. So if there is a reason for me to go short, it would be taking out relatively equal lows right here, source of liquidity, and put this in my trade. It would be to take out Tesla liquidity, relatively equal lows, and then after that to see it run higher. Now the premise or the concept was all time and price. That was the factor. Now while we were busy trading on Monday, we had Monday's high, we had a drop, and we had a high traded back into it. So let me get, we had this, we had a slow, we had a drop down, which proves to me as my market structure shifts. So my market structure shift, price close below this low, wait for it to retrace back up. This like a low risk entry. In this process, price had built a high and a high, so this was a focus for a run on liquidity. So for this week, I was looking at the sell side, and at the same time I was looking at the buy side. Sell side being all the way here and buy side being all the way here. So on the, let's go to the 15-minute chart, 15-minute chart. So on Monday we had a very strong impulsive move. We had price dropping aggressively. We see we left this CB, we left BC, we left this BC, we left this BC. We didn't really care about this portion. This down move like this becomes a breaker block. Okay, so it's up close candles becomes a breaker block. So we left price aggressively downwards, a displacement, a market structure shift. The following day we had price drop down, we had accumulation, right? So we had accumulation. Now while all this was happening, my focus was seeing price go lower below the SASA liquidities and the daily CB, if at all, the mean threshold or the low quadrant. This is the upper quadrant and this is the lower quadrant. Split the range into two. So we had the breaker block. This was a breaker block. So the following day we had, after having the drop down, we had accumulation, we had a manipulation up into the breaker, and then we had a sudden displacement, which we had a displacement downwards. We had a little pullback, we had a slight pullback, then we dropped down, then we went again into accumulation again. All this accumulation, we retraced back up into this breaker level and into a fair value gap. Okay, so this is Tuesday's trading. So we had accumulation, we had a manipulation, and then we had distribution, sending it down. Then Tuesday in the night, while all this price action was happening, late before post New York trading hours, we had price dropping down into this level right here, which was our bullish breaker block, a breaker block right here, a fair value gap, a daily CB, the lower quadrant of the daily CB. So we're going to fine tune this into a 1 minute chart. So we're going to talk about today's trading on the 1 minute charts and 5 minute charts per se. So on the 5 minute chart, two things you're looking for whenever price comes into an institutional or a higher time frame, fair value gap, PDRs or whatnot. You want to see a willingness to run higher. You want to see it show willingness to run higher. So looking at the 1 minute time frame, I was watching, this was 3:22 p.m. New York time before the closing bell. So I was watching this, sell side was taken and price closed within this range. So this was the story behind it. So while my target was actually met on the daily time frame, and price are already filled in the sell-side liquidity at 21374.95 and dropping down into a 1 hour fair value gap with this black line being the breaker block. Let me outline that, being the breaker block. For memory purposes, I'm going to show you again, being the breaker block on the 1 hour time frame. Okay, and overall we've been bullish, so we're looking for buying opportunities. So this being the breaker block from this high down. Now the reason why is that because on this high there are a series of sell elements resting here. So from the high down we had the breaker block and we had this buy side inefficiency, and this is a swing low. So pertaining to a normal price action theory, if this is a swing low, we had this high taken out, which is a market structure shift, and the rule is market structure shift, come back for a low risk entry, and we have a push. So on the 1 minute, let's get back to the 1 minute time frame and do our PD arrays, mentioning, talking about all the shit and all the shenanigans that happened. Today was really fast. I didn't really expect it to deliver to my level I wanted it to see it go. So we have sell-side inefficiency, so we have a CB, we have a BC. This becomes a balanced price range. Why? Because we have price dropping into an inefficiency. We have two down close candles. These two down close candles, the up close candle, the last up close candle becomes a breaker, and we have price dropping into the CB, and then the next option we have a fair value gap here. So we have that fair value gap. Let's put this in blue. So we have this fair value gap, and this line, this broken line, is the middle portion of the daily BC, the middle portion of the daily BC, which was our targets for the week. So this middle portion, and then let me get that in shade to make it thick. So that's the middle portion, that is the main threshold of the daily buy side inefficiency, sell side imbalance. So let's get down further. So we had price, after creating a CB, we had an inversion fair value gap. So this being an inversion fair value gap, the reason why it is inverted is simple, and the reason is because we have a CB, price trades through it, leaves it, close above it, comes back into it. That's your key entry. So my entry was on the low right here, but I actually pyramided another entry here. Remember, again, we're looking to the left, we have another CB, right? This is a CB, we have a breaker, we have price creating a high, we see this low, we mark out the breaker, price trades try to reach for it, couldn't, left it aggressively, which is really no big concern because we needed to show a need to move higher. So we have a CB, we have a BC, and then inversion fair value gap, leaves it, close above it, returns into it, taps the main threshold of the daily BC, that is daily fair value gap. We have a breaker block, extend that in time. Having that breaker block, price leaves it, comes back into it, we have a fair value gap here, taps it, institutional entry, went higher, come back again, we have another gap, another fair value gap, another institutional entry, trades into it a little while, leaves it, comes back, taps it, order block. we have, that's a bullish order block right there. So remember, you need to understand the direction of where price is likely going to go to be able to use the PDRs. If you remember, I said that I would like to see price gravitate towards my main target, which was 21,660.90. Buy side liquidity relatively equal highs, and order flow has been bullish. So we have fair value gap, price trades into it, leaves it, comes back again, taps the bullish order block, and we have price leaving. We have a breaker right here, and we have an inversion fair value gap resting right here. So we have a breaker, price don't really mind. So we have a breaker. This is also a CB, series of sell candles, balance it out, a breaker block, leaves it, taps, trades a little bit into it. We have another sell side delivery right here. So you see everything the price is using. We have another sell side delivery right here. We have, in this situation, we have 1, 2 series of spike candle. So we draw that out, extend that in time. Now at this point, when price gets above like a key high, a swing high for me, I don't really matter on the PDRs because I'm entering down here and pyramiding more here. So this now boils to time and the London Open. So for the earlier part of the London Open, if you watch closely, remember this breaker block we had, a breaker block followed by a fair value gap, a breaker block followed by a fair value gap in a discount level is pretty sensitive. So we have price trade up, shifts market structure, comes down, retrace back up, dips down into the breaker. We have this accumulation, builds sell side liquidity here, sell stops, sell side, but again comes down, drops below it, and we have these upward moves. For London Open, this downward shift was caused by a bearish breaker, which was resting here, and a fair value gap. The price drops down aggressively, offering London Open to this 235 being the London Open. After the London Open, all we had was just magic. The London Open, we had a pretty good move. So we had this move, we had a shift up, comes back into fair value gap, bullish order block, runs higher, comes back again, fair value gap, runs higher, comes down again, bullish breaker, 2 down close candle, comes down again, runs higher, comes down into a fair value gap, runs higher, comes down again, consolidates a little while, crawl, comes down into it, runs higher, break, we're looking for discounts, draw from its low to the high, drops down 50%. What is this? 7:47 a.m. This is 7 o'clock, 7:35. We run into the fair value gap, drops down, bullish order block, runs higher, closes above it. Beautiful, nice delivery. And we have what do we have here? We have a breaker, leaves it, trades into it with this wick, runs higher for the New York 8 a.m. So all we had was just buy, trades higher, comes down, fair value gap, and all these things it was doing was because we had a CB resting here. So we have an inversion fair value gap, shows this, an inversion fair value gap, leaves it, trades down into it, runs higher, tries to trickle down inside this retail level, trades, climbs down with his fair value gap, pushes higher, takes buy side, drops down, take out some lows. Beautiful delivery, zero stress. So what is the key to everything in this price action? Let's get rid of everything now. The key thing, or the key takeaway, was using what was available to us, watching this fair value gap. That was the key thing, and watching what was available on the high. So buy side liquidity, which was actually available. I'm trying my best so this doesn't exceed 30 minutes time. So what we're looking at, Friday, we have Monday, we have Tuesday. All right, so we have swing low or swing point. My school of thought is this high, this up close candle, this down close candle, and a down close candle. This is a bullish breaker, so a breaker, another block. So my thought process is tagging this as a breaker. This is just analysis for maybe another day, but this is my thought process now. So we see price dropping into this BC. There's buy side, sell side inefficiency. Let me map that out. So BC. So we have BC right here, the middle portion, and let's refine that quickly. Let's mark out what we targeted earlier. So we had buy side being targeted, sell side rider. So we had sell side. Friday's low. So we had sell side liquidity. Now this is just like a fresh thought process on what I'm actually now looking at the price. That's why I said I'm going to be doing like a pre-analysis and a post-analysis. So if my analysis plays or comes to fruition, I do a video, but this is the first video, so it's just kind of rough and whatnot. So we have sell side taking on the 1 hour, on the 1 hour, refining our fair value gap into the bullish breakout that we actually saw earlier. So we had a 1 hour breaker. So this is a breaker block. And so let's take a quick, let's skip to the part where I'm all done with the analysis and we just talk about it to save length of the video. At this point, we're just looking at the middle portion of this. We're not really going to mark that out because we don't know if this drops and closes within the range before market closes. So 11 minutes, we're closing outside the range, possibly still going higher, whatever the case might be. But we're outside the range, and until then we just need to wait. So dropping down to our favorite time frame, 5 minutes.